But yeah, it's all bonds mainly.
So you do forex
Bonds,
on the spot market or on the futures market?
are futures only. I don't do futures.
Okay.
Just so you
But
guys
no, the
go.
bond
Sorry, go ahead.
market,
Go ahead.
the 10-year I do a lot of, the 5-year I do a lot of, 2-year I do a lot of. I do bonds as well. Do shats, things like that.
What? Shets?
Shats.
You want to type that in the
I
chat box if
don't.
you want?
They're the shorter term bonds in Germany.
Okay, I didn't know the name. I only know the bond name. So.
Yeah, but so as an algorithm only does about 3 trades in each one of those, each one of the futures markets per day.
Yes. So are you also trading the interest market like euro dollar?
Yeah, sometimes I trade the euro dollar, but sometimes I will flip across and trade. Like once in a blue moon, I'll go and touch the say the mini futures contract, but very rarely, right? Very rarely I don't touch that. I touch all the bond markets and I pick across into some of the currency markets sometimes.
So you trade based on algorithm, based on your own reading of the market.
Yeah, well, I've been short the euro for been trading the euro for quite some time. I remember I was on a call a few weeks ago and I told everybody I was short the euro.
Mm-hmm.
And I'm still short the euro. My algorithm's currently got a short position going from there.
Hey, let me just mute this guy and and sorry about that. Go ahead. Sorry, George. Go continue,
Okay.
guys. Go ahead, guys.
No, just talking about the euro, and euro's been a good thing to trade recently because it's had a bit of volatility. And a few weeks ago, I told on the chat here that I was short the euro, and I'm still short the euro. So,
Mm-hmm.
but that's been.
So Goldman Sachs went public today or the other day that they predict 1.0 euro dollar in the next 4 years, I think. What do you think
Yeah,
about it?
well, I'm shorted since 9/21, right? That's the last trade that I did. It was a short trade.
So 28 to 920, right?
Yeah, September
Yeah,
21st.
9/20, 9/21, yeah, that time.
Okay.
So right now I've just started recording the webinar. Is that okay, guys?
Okay.
So if there's anything proprietary you don't want to share, don't share it. Okay.
Okay.
So Gigi, I was asking you about so you have the ability. I mean, remember I'm new to Python, so you have the ability for Python to call DLLs.
Yes.
And how do you go about doing that?
So it depends. In Iron Python, you can use the .NET mechanism like code marshalling.
Of course, yeah.
And in normal Python, you can use some libraries like C types or CFFI. There are a few libraries where you say this is the DLL name, this is the function name, this is the kind of parameters that is accepted, and you call it.
Okay, and is there any particular package I should be aware of to do that?
Well, the main one is C types. It depends on what you want to call, so more or less. When there are differences between them, so the best solution depends on exactly what you want to do.
Well, if I just want to call it like a standard DLL generated from C
Then
sharp,
you can use the one bundled in Python, which is called C types.
C types. Okay, that's good enough.
I'll type it here.
Yeah, thanks, man. So you use
It also works in Iron Python, so it works both in both interpretations.
and as you said, Iron Python currently right now is not 100% compatible with Python. So obviously,
No, it's only 2.7. They said that they're working on the 3 version, but I believe it when it's ready. So.
yeah. Well, I learned a lot from you, so I appreciate you being aboard. Because I think we got 7 people right now. We got James, George, a new guy just dropped in. We got you, Jeff, and Gigi. Let me just mute this guy, whoever that is. Hang on here. Just give me a second here. I'm just waiting for where my mute is. Ouch. Sorry about this. So you're okay. I got two Jeffs here. It looks like. Sorry, man. And it's a person by the name of John. Okay, I just muted him. There you go. We're all good. So, welcome everybody. We're recording right now. It's Brian here. We have aboard Gigi. We've been talking about Python, his advancements in Python. Like I said, Gigi, I learned a lot from you regarding Python. And also, Jeff, sounds like you're an active trader using Python, which is pretty good as well. What version of Python do you use, Jeff?
It is in the chat box.
Yeah, just oh, I see. Okay, right. So let's get started. Like I said, let's break it out into just general trading. I'll do my best, whatever I can, to support whatever your answer or my answers are. Anybody got any questions pertaining to just trading technology? So we got 6 people right now online. You guys got any questions? Jeff or Gigi? We're speaking. Because to be honest, Gigi, you're pretty advanced from last time I talked to you.
Well, it depends. I'm still trading manually, so I'm still working on my algorithm.
Right.
But I help my manual trading with some automated analysis.
Right. And how far along are you with your platform before you start live trading it, like with terms of execution and stuff to be fully automated? You pretty close to completion, or?
It depends on what I want to do. So there is stuff to do, but it's measured in weeks, so not very much.
Oh, I see. So you're not high speed.
But I need to work more on my system, on my models.
Okay. So anybody else got any questions? I've muted pretty well everybody by the looks of it, just Gigi, myself. Okay, George's got a question for you, Gigi. What models is your system based on?
So I'm using statistics, not very advanced ones, and based on, so I trading Forex for 5 years, so I noticed a few patterns in the market, and I'm using automated tests to measure how profitable they would be.
How many pairs are you trading typically, or that you're watching, like 6 to 12, all the major ones?
No, I watch 2 or 3, the euro dollar, euro Swissy, and dollar yen. So basically the 3 of them.
Okay.
And I also watch the others, but I almost never trade them.
Okay.
But of course, the things that I noticed on these pairs, I'm pretty sure that they are also present on the other pairs. So that's what I need to automate.
Right.
All of them.
So you're obviously, what you're saying is you're noticing a lot of patterns that you're able to automate on a universal level on other pairs, as you said, right?
Yes, I mean it's basic stuff like providing liquidity, nothing very fancy. So I do have some fancier stuff in mind, but I will need to work more for them, like using sentiment data and more advanced statistics.
I guess George asked, do you limit your model for just pure on Forex pairs, or can it be expanded onto other?
Of course, I have data from other markets, so I will test them also on them, but I'm not sure I will trade those other markets because I find them a little bit more riskier than Forex.
So I know George trades options. I mean, actually, he's got a new question. What the inputs of your models? I guess kind of parameters.
So price data in the form of tick data. I only use tick data, sentiment analysis. I mean, positioning, like how are the clients of various brokers positioned. Volume data. I have some Forex volume data. And so basically this, yes. And of course I modulate everything with my own interpretation. So if I know that, for example, the cable is the pound, British pound, there's a referendum there, I will avoid trading it for a while.
But when it comes to your sentiment analysis, are you looking for obviously new keywords?
I have that kind of data, but I don't have time to analyze it yet. So I'm speaking mostly of already public positioning information, like at what prices the clients of various brokers brought in, so where are the stop orders, stuff like that.
What about in terms of news items? Like, what are you using as a source? Are you just using, like, let's say?
I do collect news information, but that's kind of advanced, so I don't expect that. I think there are easier stuff to do before getting into news analysis. And for that, you need really, really fast feeds and connects and everything else. So that's really high frequency.
Right.
So,
Yeah, that's what I was trying to drive at. Is like what you're using as a trustworthy source, because like we have use of like I use IQ and it's got a pretty good data feed. So I mean, but when you're
yes,
using
but this has retail kind of data feed. So you can't compete with Reuters, which gives you like in the first millisecond the data because they are co-located with the trading algorithm. So their news releasing algorithms are co-located with the trading engines. So
okay.
you can't beat that.
So in terms of how you're gonna use sentiment analysis, are you just gonna look, like I said, look for certain keywords, key phrases?
No. So sentiment also means positioning data. So maybe I should use the positioning word more correctly.
Okay.
Basically, I input into my models also the positioning of retail clients, and I see it's some sort of machine learning. So I try to find correlations between certain technical aspects of the market and the positioning of the client.
Gotcha. Okay.
Because I noticed that this seems to work.
Okay. I know George just asked another question. How do you access the volume for Forex? Because like that's something I'd like to do.
One of the brokers I use, FXCM, provides you minute level volume information for their clients.
Okay, and that's only.
No, I don't.
Go ahead.
The next question, using volume profile. No, I don't use volume profile. I do two things with volume information. First, I try to look what the profitable traders are doing. So you can see by having the volume information, you can see that there was, for example, a big. Let me show you an example because I have.
You know what? If you want, I can make you presenter, and then if you want to demo it on your desktop, I have that capability.
Let me check something first.
Okay.
Let me find, because I'm not sure that I have the information ready.
Right.
Just a minute.
Got some more questions coming in from.
Okay, I have just a second.
But in the meantime, for the volume profile that FXCM gives you, that's only obviously for their own clientele, right?
Yes, but they are the biggest broker in the world.
For FX.
So
yeah.
for FX, yes. So and they also use a lot of hedge funds and smaller banks actually go through them. So
Okay.
they are very big in. So for example, if you look in Wikipedia, the top 10 forex banks in the world, you have the list there, and FXCM would be number 9 or something like that. So it's really big.
Right. Yeah.
So what I was saying, for example, if you know that, if you see that there was a lot of volume in a short time, you know that somebody big, for example, in the market was quiet, you know that there was a big trader. And if you find later the same kind of volume in the other direction, you know that it closed the position. And you can look at this kind of things to find new trading strategies. But of course, it's very much hit and miss. But I'm using this for generating new ideas, so to see what other big traders are doing, maybe to get new ideas.
I see. But with those big traders, they're not impacting the entire Forex market. It's just only going to...
Yes, but think about an election exit poll. So they actually only interview at the exit poll 0.2% of the people. And if you look at the accuracy, they are within 2% of the actual result. So having volume information from a big broker is just like this. Of course, you only see volume for something like 5% of the market.
Right,
but it's just like an exit poll. This 5% of the market has all kinds of traders, from the $10 retail guy to the $1 million account, little small hedge fund.
Okay.
So you have a very broad cross section of the market. So it's just like an exit poll. Yes, it's only 5% of the market, but it represents pretty much all the market in what they are doing.
Gotcha. Understand.
So I find it relevant.
Yeah, because I mean, courtesy of you, I've looked at Oanda and, I'm looking at Oanda. I mean, they're local boys, but you know, from what you're telling me with a volume with FXCM, that's something interesting to.
You don't have to be a client, so you can only open a demo account and get it. So.
With a demo account, do they limit you on how active you have that account for?
No.
So once you open a demo account, it's yours forever, eh?
I think they're requesting a trade every 3 months or something like that because a few times they deleted my demo account. So.
Oh, okay. Okay.
Because I didn't do anything with them.
And what's
I learned, and now I open every 3 months. I open a new trade. So.
Oh, I see. And what's the minimum? Oh, I can find all that out. Yeah, that's very interesting what you're doing there. Anybody else got any questions for anybody? Because we've been talking about with Python, something I never really explored. We've got 8 people. George, you got any more questions? So 2 more questions came in. Looks like for you, Gigi.
Mm-hmm.
So
I don't trade very frequently. I mostly trade like a few times a day. So today, for example, I did something like 4 trades, and each one of them a duration like, I don't know, between 10 minutes and an hour, something like that.
Yeah.
Because like I said, I'm manually at the moment. But if I will I want to trade automatically, of course, it will be much more trading, especially if I will trade like 100 pairs and not one like now.
Interesting. Well, it looks like George is asking for a demo, but I don't know.
A demo, but a demo of what? Because, for example, there is nothing to trade.
Right.
In the instruments I trade right now.
And I guess George came back with how long you keep the positions open for.
Like I said, between a few hours and maybe a few days sometimes.
Yeah. John, I think John asked if this is being recorded. Yeah, it is being recorded.
So for more clarity, I trade the Euro Swiss franc, which maybe some know that there is a limit on there. There's some sort of a peg, and I'm taking advantage of that peg.
Okay. Interesting. Anybody else got any questions? So John asked if London Quant is coming.
Yes, I also wanted to ask you that.
I have him on Skype right now. He is active. I don't know if he's coming aboard, but just so everybody knows, is he'll be aboard. I talked to him today earlier. He has confirmed for October 1st. I think it's next Wednesday. So if you got that's what he's on for, is to take people's questions and stuff. So he'll be aboard next week for sure. But I'm trying to get him to come out tonight. I guess George's got a question. What's your opinion on the yen-US pair?
Well, I did trade it a little bit, but I don't have a very strong opinion. So
right.
I don't like people which you point them a currency and they immediately say it's going to go up, it's going to go down. I don't know. If I would have a strong opinion on the euro-yen, I would trade something on it. So.
Right. Well, I think that's what people are always looking for, just people, I'm not saying that John is part of that, but there's always people asking for tips like that, and they're just really chasing the stock.
Yeah, but you see the problem with tips that I may have, for example, I would say, yes, I would buy the euro-yen now. And let's say that 5 minutes from now, after this meeting is finished, a news comes or the price action does something, and I immediately sell and close the position and go the other way around.
Right.
So if you don't know what I based my trade on, what's the reasoning, you may bought and you may have held it for a week and you lose money. Well, I will have closed it 5 minutes after I said that I would like it.
Right.
So you need to know the whole idea. And
right.
So this is what I don't trust tips, because you need to know exactly. So, for example, a tip, it might have a 50% winning rate. So, and that might be good if you win sometimes, you lose sometimes. But if somebody takes it only once, they may take the losing one.
Yeah. I know, like we had a meetup locally here in Toronto. I know we got two people aboard. There's Georgia was there and James was there, and we had some two retail guys that have been part of the group as well. But the consensus is that you need to know how to innovate your own ideas to be a real, true, profitable trader. And I know, talking to you, Gigi, you're one of them as well.
I don't believe in taking ideas from others. So.
Yeah, and even if you do, it's very short-lived or whatever. You know what I mean?
Yes, and if you take an idea, you need to test it yourself. So the idea may be valid, but you need to test it for yourself, and if it works, yes, use it.
Exactly.
I did take some ideas from what I found on the internet. So.
Right. I mean, I have my sources as well. So, George, do you have any advice for new Forex traders?
Yes, I see there was a new question with databases before that.
Oh, right. Yeah.
So I don't use neither of them. I do use SQLite for some stuff, but it's not directly for trading. So I use it to organize my data, which I collect from the web. I use SQLite.
Because go ahead.
But I keep my tick data in flat files on the disk, in compressed flat files. So I don't use database. Databases don't scale well. So I have billion ticks over different instruments and different brokers. So it's hard to keep that in a database. Yeah,
and that's what I was gonna. I mean, I can answer that from my end. MySQL I've always used. I know the newer projects that are coming out because of Oracle and where they're at. A lot of newer projects are moving over to Postgres. So. For me,
Postgres is the better of the two, but I don't think it's still. I mean, of course, it's easy to use, but maybe for candle data it's useful, but for tick data, I don't believe it's appropriate.
Yeah, I mean, I know from my end, for native databases, you have to write your own, and it has to be pretty well blitzkrieg fast.
Yes, it depends on what you do. So.
Yeah, exactly. Well. You're pretty well a tick level guy, so that's where it's going to help you out is having very fast rolling your own solution database. Now let me.
I do have some big latency because the data is compressed, but I don't need it for real-time trading. And if I will need, if I need data for real-time trading, I will load it into memory. So that would not be a problem.
Would you have you ever tried playing with any of the NoSQL like Redis or Mongo?
I used that when I was employed, but they are very good when you have like a petabyte kind of data in thousands of servers. To keep data on a single computer, they create more problems than they solve. So,
okay.
Unless you have data which requires something like 10 machines with 10 hard drives each, you'll lose more than gain by using them.
Yeah, because
they are not for storing data on a single computer.
Right, but when you say you're using SQL, like, don't you run into any challenges with that one, especially when it comes to writing a process?
No, because like I said, I don't store tick data.
Right.
I store only stuff I download from there. So the URL, the time I downloaded it, the size of the data I got, and the data itself, I store it in zip file. So I only store like a pointer in the database so that I can find it quickly to know into which zip file to look.
Okay.
So, for example, my biggest SQLite database is something like 1 gigabyte, but I have many of them. So, overall, I think I have 50 or 60 gigabytes of SQLite data.
Okay.
But neither they are sharded on instrument, for example. So, one database for each instrument, for each site that I download data from.
Okay, that's pretty smart architecture, actually.
Yes, I started with a single one, but there are problems because, for example, if I wanted to delete data from a site or to rename it or stuff like that, it was complicated in a single database. So it's much easier to use multiple.
Yeah, it makes sense. But you're finding it's just a lot easier to just use flat files, eh?
I'm not sure if it's easier, but it works for me. So certainly using a database, it's easier than using flat files.
Right.
But if you try to insert billions of ticks, it's going to be complicated. So.
Yeah. So anybody else got any questions at all? If anybody, George, anybody?
And the last question with advice, I don't really have advice, so.
Yeah, it sounds like George is interested in learning about Forex. Now, are you using Forex because it's faster moving, or what's your preference with Forex?
because I find it less risky. So
Okay. And
now I don't use FXCM Pro, but I use FXCM Active Trader. I do have offers to move to FXCM Pro, but I'm investigating LMAX first. So
how are you finding
so
LMAX?
that
How are you finding LMAX?
no, I don't actually trade there yet so much. So, but I'm thinking about moving my volume from FXCM to LMAX. But there are some problems with LMAX, so I prefer to stick with FXCM right now.
And what like okay, I mean what are you identifying as problems?
Um, for example, LMAX has a really nice overnight holding cost, so it makes sense when you trade like high frequency. But I'm still sometimes holding trades overnight, so that would cost me a lot on LMAX.
Okay.
And another thing which is more risk stuff kind of thing is FXCM guarantees you that you can never lose more money that you have into your account. So if you go negative, they will eat a loss. LMAX
Really?
doesn't guarantee you this.
Oh wow.
And I do sometimes use some very risky strategies, like all-in strategies, in some situations. And I want to be sure that I will not lose more than the money that I have there. So.
Right. And I guess
But if I will move, when I will move to fully automated trading, I will probably go to LMAX because it's much cheaper.
right. And so another question came up from George. How'd you get started with Forex? Or I don't know. Is that a
Well, when the financial crisis started, I was very interested in it, and one thing led to another. I actually started by trading gold, and then I started trading Forex. So,
And then another question came in from Shalom. What are your favorite Forex pairs to trade?
like I said, in the last 3 years, I traded almost exclusively the Euro Swiss franc.
Yeah.
In the past, I also traded Euro dollar and dollar yen.
Yeah. Yeah, it looks like we got that covered. And what type of risk management are you using from George?
Well, it's like I said, since I'm trading manually, I don't use automated stuff yet. So like Kelly criteria and stuff like that.
Mm.
But I use the basic common sense. So like not risking too much, not putting all of your accounts in one position.
Yeah. And another question from John. What did you think of futures since you traded gold versus FX?
Actually, I traded gold on the forex broker, so like a CFD. I don't know. I never liked futures because on the forex market, for example, they have less volume than the spot market. So the futures, the CME, where future currencies are traded, has something like twice the volume of FXCM, so it's not much more volume. And I don't like the tick structure and some organizational aspects of that. And the leverage is kind of low, and I'm not sure if the futures market for currencies are open 24/7. So basically, I prefer trading spot forex.
Wow. And you're just using exclusively FXCM currently right now? Because I remember you told me you were using...
And actually, I have many live accounts. I had an account with MB Trading in the US, which is most known for stocks and futures.
Yeah.
I also have an account with Wand. I have an account with Dukascope. I have an account with LMAX. But pretty much everything is with FXCM because, like I said, they have very low overnight costs, and they guarantee you that you can't go negative.
Right. Okay. But outside of two outstanding issues with LMAX, it's something that you would be considering, right?
When I will go to fully automated trading, I will certainly move because they are something like you would pay half the commissioning that you are paying on FXCM, and the other thing is that they are much faster. So
there you go. Because I've always tutored LMAX. I've always loved LMAX as a broker. Anybody else got any questions? Anybody? Been on for half an hour now. Don't be shy. You got any questions, Gigi?
well, I did, but I have them from for Forex Quant. I had them, so I want to talk some technical stuff with him.
If you want, we can leave that till next week. The conversation between the two of you guys would be very interesting. Question from John: do you have the Java API? for FX?
Now I'm using their .NET Forex Connect API and also their Fix API.
Oh, so you are using Fix, eh? Wow.
Yeah, I wrote my own Fix engine in Python.
Wow. That's pretty impressive. I guess a quick FX Python.
No, not quick fix. I wrote my own engine.
Right from scratch.
Yes.
Wow.
But it's very basic, so it's not like I'm supporting everything that Fix can support. So I'm only supporting taking rates and doing simple trades and stuff like that.
Okay.
And actually, I'm doing my trading through the other APIs because it's a little bit easier to use. So basically, I pretty much use Fix only for getting really good market data.
Okay. Wow. Have you ever looked? I guess where you're from, you're in Romania. You don't have interactive brokers as an option, do you?
Actually, last time I looked, they accepted European clients.
So you would qualify.
Yes, but I looked at them and I didn't find anything appealing. And there are a lot of people complaining about their trading software, their TWS.
Yeah.
That it's slow, that it crashes, that it uses a huge amount of RAM. And the other stuff is that for Forex, they are not as good as they are for futures and from other stuff.
Yeah, that's what I agree. How do you find...
And
Go ahead.
yes, and I looked at them in detail a few years ago. I looked also again a few months ago, but I didn't see anything compelling to move to them. So.
Wow. And yeah, I mean, I haven't seen any major changes the last few years with IB as well. I mean, from an API side, they seem to be the best to support what I need to do. But once again, talking to you, you're making me rethink a lot of things here. So
basically, the best broker for high frequency trading for Forex is LMAX. So
yeah,
unless you have other kinds of requirements.
What about how do you feel about Dukascopy?
I use them because they have very good data. They provide level 2 data for Forex with volume. This is very good.
But they only support Java, right?
Yes, but it doesn't matter. I have a small Java program which just downloads the data, so it's not. And then I use it from Python. So I only download it from Java, but I process it in Python.
Okay.
And I didn't trade with them. They have very good commissions.
Mm-hmm.
So they will be cheap, about as cheap as LMAX. But not so. There are some stories on the net that they don't like winners, so I'm not sure what to think.
In terms of? Go ahead.
They also launched binary options, so I'm very interested in that, and I opened an account just for that.
That's for Dukascopy, right?
Yes, because I believe that they are the first real serious broker that offer binary options. So there are a lot of opportunities there.
Okay. John just made a note here. You can use the interactive brokers Fix API instead of TWS for execution.
Yes, but like I said, I can use Fix with Dukascopy, with FXCM, with LMAX. What other advantage does interactive brokers give me? So.
Right. I guess I'm going to tip here. Institutional use for Fix, stop obsessing over secondary, tertiary APIs in net, Java, C++ that they can or may not give. Okay.
Yes.
Yeah, how can I address that one? I don't obsess over Fix. I just like using .NET, Java, and C++, whatever seems to work the best. And in terms of data, I'm just realizing the tick data is fine, but it's just too much noise with it. You know what I mean?
Yes, but I like to have the best kind of data possible, and then if it's too noisy, I can resample it to a lower frequency. So
yeah,
it's easier to start from the data.
Right. Yeah, I don't know what John's technical level is on that. But anybody else got any comments or questions at all? We got quite a few already. Anybody at all? I mean, I could talk with you, Gigi, for a long time about all this stuff. Because right now I'm looking at the charting for using OpenGL. There's some pretty advanced stuff that's out there. And as you said, you're only sticking with Windows just due to the fact that some of the software you're using you can only find in Windows, not in Linux.
Yes, but it's not necessarily trading software, so I do.
Oh, I see. Okay.
And and I like the fact that Windows works very fine for me. So Linux it would be too unstable to use on the desktop, and so I need to go with Mac. And with Mac, there's some very critical software for me which I don't find there. So.
Right.
And for example, how would I connect 12 screens to a Mac, even a Mac Pro?
Right.
It has 6 outputs, so.
So how are you configuring your 12? Like you said, you're going to move to 12 monitors. I mean, most of them are just going to be used for charting and watching.
Yeah, the problem is that I have a lot of Python processes downloading data from the net at the moment.
Okay.
And I put them on 2 of my screens, so they are using my screen space. And I want to monitor some. I mean, I have some stuff open which I use. I look at it very rarely, but which takes my screens.
Right.
So if I will have more screens, I can move them to the screens which are not right in front of me. I'll put them on my side.
Gotcha.
And I can concentrate my main screens to just watching price data. And like I said before, using that OpenGL plotting interface to show in real time all the tick data. So like from all the pairs, not only for Sri Lanka, to look for new pattern.
Do you ever see yourself move into outside of Forex as well, like equity or futures or options at all? Or just...
Equities probably not, but pretty much all the brokers today offer you, for example, at FXCM you have currencies, you have metals, you have oil, you have US stock indexes like E-minis, you have world stock indices like the French stock index, the German stock index. So they have the big instrument. You have bonds, you have the US bond, you have the UK bond, the Deutsche Bank.
Right.
So it's not like I'm lacking instrument.
But let me ask you this. Go ahead.
No, this was all I wanted to say. So
Forex
brokers do offer more than just Forex these days.
No, I understand that. But the question is, with FXCM, they've had a bad reputation many years ago about market making and manipulating.
Yes, but that was like in 2007. So in 2000 then they moved to today's agency model. So now they win. They are paid by commission, so they don't care if you lose or win. Okay. And I won a lot of money of them. I withdrew them, all of them. Then I put them back, so I had no kind of problems with them. So
okay.
I have nothing to complain about them.
Okay, that's good to know. So John came back with how's the liquidity on those CFDs?
Well, I'm not trading like $100 million in 1 second to worry about liquidity yet. So, and like I said, I never actually traded CFD so I traded the E-minis a very, very long time ago, but in the last years I traded exclusively Forex. So even if I have access to the other instruments, I never traded. So I didn't find a problem with them yet. Of course, if I would be to trade each day and every day the E-mini, maybe the cost on FXM would be too high and I would move to a proper futures broker, but that's not the case yet.
Mm-hmm. Who else got questions?
I'm not saying that FXM is good for trading E-mini. If you traded mini all the day, you probably would be better to go to a futures broker. But if you want to trade it once in a while, it's okay.
Okay, it's good to know. Who's got questions as well? Because regarding futures, was it CME? I think it was George last night was saying that you can get literally a seat on the CME or a share seat, and you can actually trade directly right on the markets through the CME.
I believe that there are brokers which give you direct market access, like Lime trading, I think, but I'm not sure, so I may be wrong.
Yeah, well, I know with Lime that the requirements are pretty hefty to get into their ecosystem. I think it's like $250,000, $500,000, so you have to have a nice big account. Anybody else got any questions or comments at all? I appreciate you being pretty, sharing your ideas, Gigi. Really, really helpful.
Okay, thank you.
Anybody else? Jason, you got questions? What about you, Jeff? Can you hear me or can you speak?
Yeah, I can help.
Oh, okay. Yeah, so you're currently working with Python as well. I think we already covered it. For everybody new, how many trades a day would you say you do?
I do about 3 trades per day on the bond market, each one of the bond markets, and and just on a bit of Aussie yen and things like that. So, not that, but, I use tick data. So, depending on what tick setting you've got, determines how many trades you actually do.
And how many like who's your oh yeah you said it was one of the bigger banks. So in terms of bonds, like with the way the markets are going, like do you see a lot more opportunity with bonds coming down the pipes?
Yeah, when you actually go through different markets, like depending on what system you've got, you'll find that certain markets trade a bit more slower and a bit more direct than what other markets do.
Right.
Okay? I'll give you an example. If you try and match together something like, say, S&P mini futures contract with the same system, which you put on, say, a 10-year bond on futures contract and see on Chicago, what you'll find is typically you might get better results on the bonds on that system rather than what you do on stocks, right?
Right.
Now, the same thing will happen then when you do it on a currency market. You might get certain currencies that work better on, say, I use pattern recognition, right?
Yep.
So you had someone a few weeks ago that was talking, the only way they trade is pattern recognition. Well, I wait for the pattern, so I can wait, from, like, a good example on the treasury this morning, I waited from the close of the market last night right up until 7:21 this morning to do my first trade on the 10-year bond.
Okay.
Okay? So nothing overnight, even though it was running all overnight, my system waited till the liquidity came back in the market, right, to do the trade, right?
Okay.
Yet you take something like, say, Aussie yen, which I also trade, mainly because I'm Australian originally.
Of course.
And I know there's a lot of trades that go on between Australia and yen. Therefore, it's a very dynamic currency pair. Each time that I've taken a short trade has always been in London time, roughly around 2 o'clock in the morning, San Francisco time. So that's, I don't know, sometimes it's later in the day, in London. Okay.
Right.
And most positions are closed out at the end of the US day. Okay.
Okay.
So again, it depends on the market you're in. What you'll find on any algorithm, right?
Yeah.
You'll find that an algorithm won't work on every single market you apply to.
Right.
That's what I've found over 30 years worth of trading, right? It just doesn't work that way. But if you get the right pattern recognition and you get the right patterns and if anyone's starting out on it, they'll find a pattern, fly to a market, and but do it in tick. Get away from daily, get away from weekly, because if it works in one, it can also work in others as well, right?
Yeah.
I like very, very thought-batted tick, right? On some I use sort of 1500 tick, right? Which is, in and out pretty quickly, right? But, that's depending on what your tolerances are for risk, right? If you want to have a lot of risk, then use daily charts. If you want to have minimum risk, get into tick charts and get into shorter dated tick charts.
I mean, you're one of the first people that I know that actually trades fixed income and bond.
Yeah, well, mainly I came from that. When I used to work years ago at Swiss Bank and when I worked in Australia for a long, long time, I look at the market this way. I look at it from when a country first opens up, whether it's China, whether it's Australia at the start of its trading business ever, right? Starts trading currencies. So I agree with Gigi, right? It's a pure market, right?
Yep.
It's a macro pure market that is a very, very important one. But remember, you start with currencies first, and then you go into what's called a forward contract. In a forward contract, in buying foreign exchange on a forward basis, so buying it out at 3 months, has an interest rate component. And that interest rate component comes from the bond market. So the currency market is very linked to the currency market, right? Bonds and currencies are very linked naturally, right?
Gigi, I'm sure you can come back. Sorry, continue, man. Continue, Jeff.
Yeah, but basically, that's the reason the bond market is the second market, really, that is generated around the world, and it's one of the more stable markets.
Yeah.
Right? Some of the trades that I do, for example, it can take an hour and a half for them to move, right?
Yeah.
Whereas the same movement that goes on violently within the mini futures market, right, can move a lot quicker than what the bond market will actually move, right? Now, if interest rates are being tightened, then that's a whole different story. Bond market will move relatively quickly. But at the moment, while interest rates are pretty stable and inflation is relatively low, bonds are a very useful tool because they're very, very stable to trade.
Gigi, I'm sure you got some questions.
Well, I never traded the bond market, so I have no idea how they move. So.
Yeah, this is a first for me. I mean,
but each one markets are determined by the forward rates that come from interest rates. So your forward rates on euro depend on the interest rates differential between the US and what the European markets are.
right.
So bonds have a big impact in your FX market. Always have.
I believe that there are all interconnected, so like the option market, the bond market, the forward market. So they all move at the same time. I don't believe that one predicts the other. So because everything is priced in each moment. So
To give an example, what about if someone comes in and finances a transaction in a different market and issues a bond market or a convertible bond market that's picked up directly in the FX market automatically, right?
I don't know, but I believe that this is the kind of things that banks do. So you go with the bank to the financing operation, and the bank will take care of all the necessary hedging and everything else. So I'm not sure how these things work.
A lot of that hedging risk is done, number one, in the FX market, right? You don't know options are going to be done on that because that's private stuff held by the banks. The bond market monitor will be starting.
Yes, but the options are also trading publicly. So at least in the vanilla market, there will be some impact if they are starting to delta hedge or stuff like that.
Definitely. So, just if you're looking for stability, right, get away from the mini futures contract. That's the first thing I would say. Mm-hmm. Get back into the bond market and pick a currency pair that has a very, very good, stability in the sense of the way it trades. Understand the trades that go on between both of those waves, right?
So this is why I'm trading the Euro Swiss, for example, because it has something like the lowest volatility at this moment. So,
well, I'll give you an example. I've got a US dollar, euro dollar, where the average trades per day is 1 to 2 trades per day, right? That's what it is. So again, that has to use some completely different math, right? Completely to what I'm using in, say, the bond market.
Yes, of course, each market is different, each instrument is different, so the statistics are different.
Very much so.
So
I would say, as being on this brand new, pick your market and study the market and understand what that market is doing.
No, but for you, Jeff, are you picking the bond market because you're coming from that world, from within industry, and at the same time, I will assume that you know the relationship between that and obviously the Australian and the Japanese yen, because of, I guess, you're more local to what goes on within Australia and how it would impact the Japanese yen.
Yeah, because I used to trade and understand the flows that go between those two markets.
Right.
That market. Yes,
okay.
That's correct.
Okay.
You haven't been in the banks and you haven't been in the asset management companies and you're not familiar with those flows. I think it is worthwhile trying to understand those flows, because you understand, the flows between two markets. Like most of the gas stoves in Tokyo are powered by Australian gas, right? LPG gas, right?
Yeah.
The flows between those two markets are incredible. Therefore, if dollar's strengthening at the moment, Aussie's getting slammed, right? Then a good way to trade Aussie is not just straight Aussie, it's to do it against yen, right?
Right.
Because it's going to fall very, very fast against yen, which is the other side of dollar yen.
Right. Well, because you brought up pattern recognition. How do you do that within your system? Do you have a database of where you're logging the patterns and the data in terms of the tick data, the bar data, and then how does the behind the scenes kind of work at a high level?
What I can tell you is it's pattern recognition. It has a possibility of 65 different patterns.
Okay.
It is run through a walk forward, and that walk forward is run 6 times a day.
Okay.
On each market. And then from that, it's set, right, those walk forwards right? And that's how it makes money.
And where do you get those 65 patterns from? Just historical that you're experienced with, or?
Yeah, it's 65 patterns that I've realized over time that got some sort of, pattern recognition, like
No.
it's just pattern recognition, some pattern which has 65 different combinations.
I see. Okay.
Actually answered my question.
But you don't need 65, you need one or two.
I guess Jason's aboard who's got a question for you. Go ahead, Jason.
You answered my question, which was actually that I was going to ask you if the patterns that you use for pattern recognition, if you do the searches for pattern events by searching for pattern fit and wellness of fit to figure the strength of your opportunity.
That's correct, by doing walk-forward analysis, all right?
Right.
If those patterns are showing up on the day, because remember, the machines out there, and I won't go into too much detail, but they're throwing different random algorithms into the market, okay? And if you can pick up what that is, and you can do that by having a combination of 65 and running that through the market, you'll figure out which one you're using. But it'll only last for about an hour to an hour and a half, right? And I try and never trade, always trade where there's liquidity in the market. If you go through and do where most of the ticks come through the market, I'll give you an example, say on the equity market, for the equity people out there. Most of the tick San Francisco time comes between the open, which is 6:30 in the morning, and finishes at 8:30 in the morning, and 2 hours of high tick activity, right? Which say in the stock market is worthwhile trading.
There you go.
Don't think always there to trade.
Right.
Or it's going to go through a lull. It goes through a lull from 8:30 in the morning San Francisco time through to 11:30, and you get busy again from 11:30 to the close. The tick data doesn't improve for the rest of the day. The tick data is only the strongest in say, E-mini futures contracts between 6:30 in the morning and 8:30 in the morning San Francisco time.
Gotcha. I guess we got another question from John. How do you connect to the Eurex ICE, and how do you interface it with Python?
Yeah, well, I just have a direct feed with a major bank, right, through their floor, right? I do it directly to the floor. So I'll have to get clearance to talk about it, but no, it's just using Python. It's a fixed feed directly with the bank.
And is that something that would be available for the public, or is that just more of something that you have special access to?
No, it wouldn't be. You'd have to have X amount of capital to do it.
Oh, I see. Okay.
But whoever said earlier, if Fix is the only way to go, I totally agree. Fix is the only way to connect to anything if you're going to do trading professionally.
Okay, so you get special access just because of the certain capital within your portfolio.
Correct.
Gotcha. Okay. So John came back with, so not on OMS, something like New Edge or Kite Fix API.
Look, there's various other ones out there which are starting to bring out better access to their machines. Okay, so, excuse me. So it just depends on who you can get for who you are.
Okay. Yeah, okay. That makes sense. Anybody else got any questions? Gigi, you got any questions at all? Or vice versa, or?
Do you have written your own software for OMS management or order management?
Jeff, that's for you, I think. If Jeff's still out there.
I think he's gone.
Is he? Let me just check on his status here. Yeah, he's still there. Not sure on that. Anybody else got any questions? We'll come back to that if Jeff's still out there.
No, I'm here. I just got some water.
Oh, okay. Sorry about that. Do you want to?
I was wondering if you have written your own GUI interface for order management.
My own GUI.
If you have written your own interface for order management, since you are using Fix, or are you using some already existing software?
No, bank's got its own fixed, and I just need to.
So you are using the bank software, right?
Yes,
Okay.
and futures. Bond futures is what I do, as well as some currency.
And what kind of charting are you using? Are you watching a tick chart?
Tick data, always.
So, but how do you display them? Do you display them in a tick chart?
I have some components that I built, and what I do is I don't really have how can I put it? Now on normal charts you would see green up and down bars or whatever color really excites you, right? I don't have that. I just have where the buys and sells are on a black background.
So you are using like something like a DOM screen,
Yeah, like a
depth of market,
Yeah.
and you are clicking there to do trades.
No, it automatically falls through.
Okay.
Something else came up from John. He's asking about Onyx plus their API. I'm not sure if Onyx supports Python. I'm not sure on that. Have any of you guys worked with Onyx at all?
No.
Yeah, that's not a cheap option either. It's like a $3,000, $10,000 a month option. I know it works obviously in C++. Anybody else got any options at all, or questions or feedback? Because we're already approaching up to an hour here at what I got. Any advice for new future traders? For you guys, any advice for Jeff? If you have any?
That's a good one.
The biggest advice I would give would be to don't listen to which markets trade, work out yourself. Number one. Number two is pull out some different time charts and look for patterns. That's the second part. Number three, really investigate the broker you're about to use.
Yeah, I agree with that. But from what, I mean, I've always questioned FXCM, and from what Gigi's saying, I mean, I'm already kind of sold on FXCM with some of the advantages, so this is good.
Well, just like Jeff said, investigate. So what you read about the FXTM is mostly from until 2007. So you need to investigate what it is, not what it was in the past.
Exactly, but with you being current.
Investigate the data. Also investigate the data feed people are giving you, because try and get some people where you can compare the same 1,500 tick
Yes,
charts.
so I'm collecting for Forex, for example, tick data from 5 different sources. And actually, a lot of times I've looked at simultaneously the tick data. So let me show you a picture, for example, because I have one that I've done recently.
Well, I can hand over the screen to you, Gigi, anytime you want.
No, but I can put the link in the...
Oh, right. Okay. Another question came up. How do you deal with the lack of volatility now, thanks to global QE and the interest rate markets? I guess that's Jeff.
Actually, I like the lack of volatility because then you can range trade the market, for me at least. So, for example, if you click on this link I put in the chat box, this is a representation of tick data from FXCM, Duca, Scorpion, Wanda on the same chart.
Yeah.
And you can see that they are pretty much the same. And I also have, let me show you a different picture where a news event happened. Just a moment.
Very interesting.
Where you can see how Wanda is famous that they are widening the spreads on news events.
Really?
And you can click, and you can see that on this other picture, for example.
I'll just play. Can you guys see that on the?
Yes.
Okay, good.
And now if you can open, I sent another link.
Yeah, got it.
So Wanda is the pink and the yellow one, so the widest. So just as the news happened, Wanda widened the spreads, and after something like 10 seconds, 15 seconds, they tightened them again. And Dukascope and FXM never widened the spread, so they kept the spreads low at all times.
There you go. That is.
What I mean, investing in it.
I was just going to say that's amazing
Of course,
information.
I haven't actually tried to trade on FXM at this particular moment, so I don't know that if my order would have executed, but at least the spread that I was having were tighter.
That is awesome info to know, though.
So, like I said, these are only 3 of my live data. So this is not downloaded tick data. This is real-time captured tick data. So it's actually what went into my computer. So it's not like I downloaded a week afterwards perfect tick data. No, this is what they were streaming live. If it was actionable or not, I can't say because I didn't try to actually trade. But I believe that at FXM, so FXM in general has something like 100 milliseconds of lag, something like that. So it's not very fast like LMAX. But if you are okay with this under half a second trades, for example, FXM is good. If you need better than 300 milliseconds time to execute, you need to look elsewhere.
Well, either way, I appreciate you sharing this, Gigi. That's really good to know.
So just like Jeff said, look at the data, look at what you are getting. And you can also see in this picture that Dukascopy, which is the red and the cyan color,
Yeah.
they have less ticks than the other one, so their ticks are a little bit slower.
So
but on the other hand, they give you level 2 information. So each tick from Dukascopy actually has 10 ticks, the 10 levels. So they have volume for 10 levels above and below the market.
Yeah.
But that is not displayed on this picture.
Yeah, a lot of people are amazed at this. I got Edwall and George saying thanks. Very good information.
So this is from my tick storage. So like I said, I download data in flat file, and afterwards, when I want, I can load Iron Python like this and display this kind of data in my browser for research or for other purposes.
Mm-hmm. That's
I do a
unbelievable.
simple thing. Every time my system doesn't work for some reason, and it should have, I keep a log of all the data from different people, and I find some strange stuff in the data. That's why I brought it up.
Yes.
Well, I mean, just knowing this is Go ahead, Jeff. Go ahead, Jeff.
I just say whenever my system doesn't work, and no system's 100%, but mine typically runs 65%, right? Typically, right?
Right.
And when it's not running, it doesn't run all day, sort of thing, and it's doing some strange things, and I'm just wondering what's going on. I'm capturing the background from a couple of different people, data sources, right?
Mm-hmm.
I've come across many, many times when deviations like this happen, right, in FX, right?
Mm-hmm.
And I don't find it as much in futures, right? But I do find it on the odd occasion in the futures market, right?
Yeah.
And I put it down to number one. It could be slow. It could be, slow connection. It could be anything. But when you see things like that, which I've seen before, right? I'm very mindful of it, particularly when you're using your own capital.
Right. George saying goodbye. See you, George. John came up with a question about what about the lack of volatility in the bond interest rates futures market?
That's why it's good to trade at the moment.
Okay. Anybody else got any questions at all? But Gigi, that's an amazing gem what you just posted. So for you, Jeff, how many data sources are you using for just like tick and minute bar and whatever else you're tracking? How many sources are you using? Just one?
I have a primary one that I pay for, and I get directly delivered for me from a couple of companies, independent what they see the data trading at, right?
Okay.
And if you've ever gone to Namex and you've seen some of the spikes going in the equity market, that's why I don't trust the equity market at all, right?
Mm-hmm.
There's companies out there that will go and scan the data sources out there for you, and bring you that data when you ask for a certain stamp. And, it's interesting.
Yeah, for sure.
if that's your business and that's your primary business, then you better understand where the data's coming from, and is it purely coming out of an exchange, or is it purely coming from a list of 14 banks, or where's that data coming from?
Right.
Because you can have the best algorithm in the world of some sort of MATLAB fantastic program, but you might find out the market's really random after all.
Right. Right. Anybody else got any questions or comments? Either you, Jeff, or Gigi, have any questions or concerns or comments?
No, I'm good.
Okay, I have one last comment to Jeff that I'd be curious to know about. I follow a lot of tech in the area of signals analytics.
Mm-hmm.
I'm not saying that that I'm much more than a neophyte in it right now. I'm counting on experience over time to make that up. But just recently in South Africa, a batch of scientists developed a method for imprinting digital signals with patterns over fiber, a digital laser, and I can see how it might be used outside of the ticks using some kind of synchronization medium. Do you think that any time in the future we'll ever see a use of digital signature stamps on tick intensity data?
Well, I'd love to see it, but first of all, you've got to get through the powers to be at the Chicago Mercantile and CBOE.
Right.
I think any way you can prove out your data and prove it's locked, right, like that, and have a lock on it, would make me very, very happy, right? And I spend probably 30% of my time just checking data. Forget about checking the analytics, right? I think I've got the analytics pretty much right on the patterns, right? They're there. But if I get rote data coming through, etc., that's where 30 to 40% of my time is spent.
Yeah, the thing that actually concerns me, and the reason why it might not come to be is that the marine cables are subject to movement, and that would introduce some stochastics. So you would have to prove signal stabilization.
Sorry, but the data going through the ocean cables is checksum, then so the data is actually the same as you sent it. So even if it's corrupted, they detect the corruption on the other end and resend it again. So you can't get corrupted data. Like
I wasn't talking about the numerics. I was talking about the topology of the pattern. The digital laser allows you to transmit a signal pattern in the optics.
But optic cables under the ocean work like that. They are using lasers. So I'm not sure exactly.
No. What I'm saying is that the likelihood is that tidal motion would induce some level of error ranging in the form of jitter on the signal.
Okay, yes, jitter. But if you are concerned about jitter, for example, they are using now microwave links, and they are talking about atmospheric laser links. So.
Right. Okay.
So they have now a
different. Something I was curious about.
Yes. They now have a different kind of optical fiber which doesn't contain glass, so it's hollow core, which can get actually to the speed of light. So, but it's just in the development stage now.
Wow, that's quite interesting to know. Again, thanks for the.
Because today they are using microwave to get around the fact that speed of light in glass is slower, but microwave have problem with atmospherics and with bandwidth. But the new technology now is to use hollow core fiber optics. So then the fiber is hollow on the inside, so you get the same speed of propagation as in air.
Looks like you've
But of course.
Yeah, Jace came back with a big wow. So we got two other questions came up. I think we already talked about it from Edwall, who asked about how good is IB data. I know that some of the ticks get aggregated with IB. How do you find the data with FXCM? Gigi, you find
Well, like I said, it's pretty much. I mean, since I'm using different brokers to look at it, it's pretty much the same as the other brokers.
Right. Okay.
Of course, sometimes it's slower, sometimes it's denser, it's less denser, but I find it okay. So, like I said, I'm not doing yet really high frequency trading. So
Right.
For now, it's okay for me.
And I think John asked for Jeff if you're using a database as well, because we already talked about databases with Gigi.
Look, I have some local databases here, which are, SQL and other things, but at the end of the day, I just pull the data off the brokers and store it in those databases.
Okay.
So I get a fast feed directly coming out of the banks, right?
Uh-huh.
From a fixed feed. But I do keep some of it in SQL servers and other things like that Python can access.
Okay, and that's like through a flat.
And are your server co-located or proximity located to your bank?
They're co-located.
Yes. Okay.
Okay, and another question came up from John. Do you trade the front month momentum strategies or go back month mean reverting calendar spreads? I'm not.
Well, you can do spread trades, futures to futures. You can do spread trades between different months and everything. But really, the only type of stuff that I would ever do like that is if I'm getting towards the end of a roll, right? And I'd be rolling one contract into the next contract. I wouldn't necessarily do like a strip of futures, like euro dollar, and things like that. No.
Okay.
But that's just me.
Right. Anybody else got questions? Oh, John asked, too risky. I guess that's a question. Are you finding that kind of trading is too risky, Jeff?
No, there is some stuff you can do in calendar spreads and those sort of things. There is an opportunity there, but I think you really got to get an idea of what the underlying market is doing first, right? Because I used to trade a lot of that back front months and up and down the curve and buys and tens and things like that.
So Jeff, I have a question to you.
Yeah.
You said that the bond market moves pretty slowly compared to other markets, right?
Correct.
I was wondering if you remember something like 3 weeks ago on 4th of September, the ECB, the European Bank, announced a surprise rate cut. The forex market moved something like 50 pips in 1 second and another 50 pips in the next 50 seconds, so 100 pips in 1 minute. How did the bonds move then? Because it was an unexpected rate cut.
Bond
If you
moves
remember.
slightly before it actually. I think the bond market already knew. The bond market was already bit before it actually occurred.
But
Right.
when the actual news happened, was there any fast move in the bond market?
Yeah, it moved about a point, right? A point on bonds. So, waiting
That's a big move?
further, right?
Yes, but it's how big is a point move? Is something like a daily move, like?
Daily move is about 17, ticks, right?
And the point is how many ticks? Because I don't know exactly.
32 ticks, 32.
Okay, so it's pretty big.
So,
And this 1 point move, do you have any idea in what kind of time frame did it happen?
Well, if we go back and we have a look,
It was like seconds, minutes. I'm curious how fast it moved as opposed to forex. Because on Forex, most of the move was in the first minute.
It basically moved from, I think, 122 up to about 122.18 up to about 123.30, right? So it was a bit over a point. It was about a little less than a point. I believe. I'm just trying to find where the moves were. Yeah, here it is here, right? The market was at, I think it's 9.5, is that right? Yeah.
The hour you mean?
Yeah, 9.5 in 5th of
Yes,
September.
about around 9.5. Yes, that was the hour.
Yeah, it was traded at about 124.5, and it only went to 125. 125.16, so it moved about a point, yeah, as I said.
In like a minute or in what period of time?
In about, well, it started its move at 5:30 and it finished its move by about 5:31. In about 1 minute it moved.
Okay, so it's
right?
So it was just as fast as Forex.
Just as fast as Forex, yeah.
So, okay.
Who knew? Anybody else got any questions?
The rest of the time,
Go ahead.
the rest of the time, pretty quiet. It moves, but not dramatically like FX does.
Well, it depends on the leverage you are using, because if you are using high leverage in the bond market and low leverage in the spot market, you can get actually the reverse. So it depends on how much you are paying.
Correct.
Question from John. So all your future trades are now directional?
Yes.
Anything else out there? Questions, comments, concerns? I think we already covered that. Are you using Matplotlib for visualization? I know Gigi mentioned that he is.
Mm-hmm.
Yes.
So the graphs I showed you earlier with the tick data were done in Matplotlib, for example.
Yeah.
Anybody else got any questions? Oh, and then John asked, does that lag in real time?
What?
No, not really. Remember, from the time my visualization is pretty rude, right? It's not dynamic.
Yes, and you are watching it with your eyes, so you already have a huge latency. So.
Very true.
Yeah, and only do it for risk management purposes. Watch it, right?
Yes, Matplotlib can plot faster than you can blink, so.
Yeah.
Very true. Anybody?
But many times, if I had pulled the trigger, I would have missed the trade, right? Many times I'm sitting here and I've walked off my desk and got a coffee and come back and I've done a trade.
Yes, this is the problem that I'm keep on having. So when I'm trying to open or close trades, since I trade manually, I keep getting
too quickly.
Yes.
You've got to automate it. You have to. And I'll give you an example. Like, the S&P mini just popped about 2 points just a second ago, right? Again, you couldn't have, if you're on a conference call like this, you would have missed it completely, and your system would have done it automatically, right?
I did something to help me, so I have like a more customized trading interface, which allows me to put something like a DOM interface, but not a DOM interface, so, which allows me to set exactly the limit, and so I can say to it, for example, grow my position to X in the next with this limit, and until that limit is hit, it will keep on adding to my position until I reach the required size. So.
Well, I know, for example, how I was short Euro Yen, right? Let me tell you exactly what it was. It was right 23.13.36 exactly. Went short Aussie Yen, right? And within probably less than a minute, right? It already dropped about 20 pips.
Yes, this most happen, yes.
By the time someone would have opened up a browser or had the browser up and even clicked that, right, you would have missed out on that 20 points. I used to do manual too, trust me, years and years ago I used to do manual, and I wondered why, that I was doing it. I was missing some of the stuff, and when I automated it, I started to see the benefit of it.
Yes, and automation allows you to play different pairs, so or different
Correct.
instruments.
And you run it down a fixed pipe to a bank, and then we're fine, right?
Yes.
Got to get a fixed connection. It's fast. It's very, very fast.
Another question came in from John. Isn't FX trading spread trading as well technically? So euro versus yen, so it moves less directionally versus say stock indexes like spreads in general or underlying instruments. Does that limit opportunity?
The way you got to think about asset classes, are they much more trending in their nature? Are they more choppy and random in their nature, right? Take dollar yen, it sits there for weeks and weeks and weeks and then breaks out in a huge trend rally. That's a trending type of thing. Look at the S&P 500, it trades randomly every single day, right?
Yes, but in the last 5 years it kept on growing, so.
Yeah. But you got to figure out which type of market your market is. If all your friends are trading E-mini, don't trade it E-mini, right? Don't trade something else, right? And really start with one market. That's what I did. I started with one market only, right? It was the Australian dollar because it moved, right? And I learned everything I could about the Australian dollar, everything, right?
But if you are trading stuff based on statistics, then you need to only do your backtest correctly and everything across validation, everything else. So if that passes the test, you can trade it. So that could be a ranging market, a trending market, or whatever. If it passes the statistical test, good to trade.
But you need to have something, take from the equity market, take something that has beta in it, right? It's more high beta. And a high beta thing is things like Aussie yen, right? For example, it's relatively high beta. Aussie dollar is high beta, right?
Yes, but this is just like a scaling factor. So it's like if it has a higher beta, you can lower your leverage to normalize it. So
It can, but a lot of times if you're going to trade it, right, you got to have it move, right?
correct.
You got to have it
Yeah,
move.
then yes, your spread it will be yes.
The longer you sit in that trade, the more the market is got a likelihood of going against you, right?
Yes.
Edwall's got a question for you guys. Do you use any AI techniques for pattern search, such as SVMs or GAs, to augment your systems?
I'm thinking about this, but I didn't use it yet. So
Thinking about it. I'm in the same boat. Do you
I
use...
mean, I have some ideas which require such techniques, but I didn't get to them yet.
You do you use any machine learning, Jeff, at all?
Well, I can tell you that each one of the markets, whether it's FX, whether it's stocks or it's bond market, has some form of randomness in it. I won't say they're purely random. I'd say there's something like about maybe 60% random. Okay?
Yeah.
So if it's 60% random, right, you've got to be on top of it. That's what I mean. You've got to be on top of what you're doing. Okay?
Okay.
They're certainly not 100%. You can't get away doing a 100% random system in the market. Right?
Right.
Trust me, I've tried it. Right?
Yep.
But you can get away with something that is possibly about, like a pattern recognition, right? Some sort of pattern recognition is something like a, 60% random. Right?
Right.
In its nature, right?
Yep.
Naturally.
So as you said, you've already addressed this. So, but you haven't addressed the bond market. With Johnny asks, is FX more random versus the stock market versus the bond market?
No, look, I've got a system that is, like, I can tell you, I can get a random system 65% to work on nearly every market.
But only some of the times, not every time.
No, it'll switch. Like, I'll give you an example. Last week, the bond market in a more random system, right, was a better trading market, right, for a more random system.
Okay, so, but it's not profitable long term, right?
And this one was a better market today for the E-mini today.
Yes, but you can't know ahead of the time which kind of market you'll get today. So to know it, to deploy which system.
So think of it this way. This week's likely to be a less, how can I put it, data dependent week, right? And therefore, if the market is sort of more in a bit of a range trading type of event.
Yes,
Right?
but this means that you are detecting the market regime. This is not random trading. So, and you are deploying a ranging system this week.
Yeah, this week's a ranging week. Next week's going to be an exciting week.
Yes, but this is not a random trading, so because you are actually detecting the regime of this week.
But if you try and put a very, very highly mathematical, quantitative, MATLAB system, right, into a 1500 tick market, the only one I can make it work on is the euro US dollar. That is the only.
Okay, so if you say, I don't believe this is possible, but if you say that you can do this, why aren't you doing it if it's profitable?
Well, I've built a very MATLAB intensive mathematical system, right? Thinking it'll work on every single market and it didn't.
Okay, so why aren't you trading it only on the euro dollar?
Well, I do. I have it on the euro dollar. Right? I have that on the euro dollar. That's why I said earlier in the call, I've been short the euro for quite some time. Right?
But it's not a random system.
No, that's not a random system. No.
Okay. No, but you were saying that with a random system you can get something like 60%.
Well, look, random systems with, which is pattern recognition, it's a random event happening at a certain time, right? Can deliver a 60% return, 60% win ratio.
Yes, but it depends on how much you win and how much you lose. So if you win 60% of the time, but you only win, it depends on your win to lose. How much is your average win and how much is your average lose?
But you watch it very carefully and you always have an exit strategy, always. I don't care about the entry, I only care about the exit. That's the most important thing.
Yeah.
I'll repeat, I do not care about the entry. I care about the exit.
Yeah, I'm in the same boat there.
I don't care about.
I don't
So if
know.
you're developing a system for the entry, all right? I would do the opposite. I would develop a system for the exit. Okay?
I don't know. Gigi's pretty quiet.
Well, I'm developing for both the entry and the exit, so I try to optimize them both. So
From my experience,
Okay, well, there you go.
Go ahead, Jeff. Go ahead, Jeff.
Well, it's great to talk to everybody.
okay.
All right. Thanks, Jeff.
Thanks, everybody. Have a good night.
All right.
Bye.
See ya.
Bye-bye.
See ya. So Ed Wells says a great discussion. So what do you say, Gigi? Anybody else got any questions? I think we're down to 5 people now. We were up to about 11 or 12. Anybody? Anybody got any questions or anything? No? What about you, Gigi? Anything?
Well, how is your research going?
My system, in essence, is very basic and primitive. As I said, you're pretty advanced. In terms of what I'm just using Excel, but technology, that's what I'm learning is the technology is not the important thing. It's the principles of risk management, risk assessment, portfolio management, all the basic trading stuff that, from my perspective, I've never really paid a lot of attention to. And some of the people that I've talked to, when you're focusing on trading strategies in terms of trading models, it's just 1/10 of the entire process of general trading.
Yes, of course. Technology helps you to scale the operation to multiple instruments and multiple markets.
John came back with when you say a Lenin quant comes, he doesn't, and then he randomly comes as a surprise at other times. I suppose that affects attendee rates. Is John there? John, are you able to speak? I don't know. I don't want you typing. If you're able to speak, just say yeah or no. I can unmute you if you want. With Lenin Quant, I don't know. He didn't say he was going to come tonight. As I said, he's going to come out on next Wednesday. He randomly shows up whenever he wants. He works long days and he sleeps whenever he sleeps. So I don't know. If, like I said, if you want to further adjust it, let me know. Could unmute you. Gigi, you're pretty knowledgeable yourself, so you're a great person to have on tonight.
Thank you.
No problem. John, are you able to respond yes or no if you want to address that over voice? Anybody? Oh, let's move on if you want. Anybody else got any questions or concerns? Comments? Yeah. Anybody? Gigi, let me ask you, did you interpret the Lenin Quant was coming out tonight?
Yes, that was my understanding.
And that was just
so that's the title. That's the title of the blog post, something like London Quant today. So
no, I understand what's happening. There was an email that went out about details for tonight, and if that was also
let me read it to you. How it's said.
Okay.
Tonight web login and the new meetup with the London Quant. So that's the title of the blog post.
Hang on, let me just. I
can understand what you mean. That new meetup was the next week, but
right.
If you read it quickly, that's not how you read it.
No.
I
understand.
The title.
Yeah, I understand then. Okay. No. There's two titles there, two separate events for tonight. Just me.
Yes, there's the end there, but it's ambiguous. So.
Yeah. Okay, I apologize there. That was to mean to next week.
Okay.
Anything else? I think there is more you can get out of Jeff in the future. He's hiding some things. John, what you need to realize is that people come aboard out of generosity. People that come aboard don't have to share anything that if they don't want to. I'm just kind of fortunate to have like a Gigi. He's sharing quite a bit. Lenin Quant's another guy like that. Ernie's another guy. Obviously, Jeff was another guy that was able to share a lot. So it sounds like you're kind of expecting it.
And there's another thing that it's not like this market has infinite liquidity. So if you share your edge, it's very easy to see it used by others, and you will. It's not that you don't want others to be profitable, but then you will have problems actually trading it because the other guys will also trade it at the same time.
Yeah, exactly.
And you wouldn't be able to open a trade. So it's not like people don't want others to win, but their winning will cause you to not win anymore.
Well, it's like what we mentioned earlier tonight. If you're the person that's just chasing stock because of some guy says so, or this is how he does his in the system, I think the key to it all is being innovative. I mean, Gigi, you're doing a lot of stuff. What you just posted tonight on these two images, I've never seen anything like that before, and that's innovation that gives you that edge.
This is the kind of stuff that Nanex does. So they print this kind of graphics, or they show different prices at different exchanges.
Yeah.
Of course, they are much more higher frequency than
Yeah. So I guess that's what we're saying. To be really good at it, you gotta you got to innovate. And some guys are willing to share this or that, and if they're holding back, that's their business. But even if they're just sharing a little bit here and there, I think that's good enough to work from, or hopefully you can learn from. Actually, Edwall came back with, he wanted to know about the recording. Yeah, I put the recording, a YouTube link on the bottom within the sessions of each meetup on the meetup.com. And then he also mentioned every win takes some inefficiencies in the market. So yeah, for sure there. Anything else? John, do you have anything else you'd like to ask or comment on? Edwall as well. What about you, Gigi? Like I said, I really appreciate you being aboard, Gigi. I've learned a lot from you tonight. And that's why I do these things. I like learning, I like sharing whatever I can, and vice versa. And again, I've always appreciated guys like you, Gigi, and some other people as well that have shared all this information, because without people like that, as a whole, others aren't picking up on these sort of things. But at the same time, as I keep saying, you cannot trade like a sheeple, and if you're not innovating yourself, you're going to eventually lose out. I see it all day and day, all the time, where retail traders are just not willing to step outside of just click and trade, you know?
Yes, and they don't investigate.
Right.
If they actually have an edge or
right.
stuff like that.
And I think even Jeff said that part of it is to know your market really well. So,
yes, of course.
But if you're a kind of person that's just copying off of others and you're not really doing a whole lot, yeah, you'll fail, and there's good damn reasons you'll fail. And that's part of the innovation, is to protect yourself based upon the experience that you find. And there's other people like Gigi that are willing to share some of that info. Not all of it, maybe, but to hold it back, I don't understand that one. Anybody else got any comments? It sounds like we're going to wind up pretty soon. I mean, this was an hour and a half. This was pretty good. So again, Gigi, thanks a lot for taking part. If you guys misunderstood with the London Quant, I apologize. But I'm hoping he'll be on board next. I think it's next Wednesday on the 1st. Anything else you'd like to add, Gigi, at all?
No, I think I'm gonna go now.
Yeah, same here.
So yes, this was a nice
yeah.
talk.
Yeah, thank you very much again. Anybody else got anything you want to add? Anything? Okay, I guess thanks to all who participated. Thank you, Edwall. Thanks, John, for coming out. Thanks again, Gigi. I'll wrap her up.
Sure, no problem.
Anything else anybody
Okay,
wants to add?
bye, guys.
Okay, talk to you later. Have a good night. I'm going to wrap up then.
Okay, bye.
Okay, thanks again. See you. Bye.